Hey everyone, so I'm super excited about this video. And I was just thinking about it as I got out the gym, took my shower, and I was just thinking, what does the rest of 2023 look like for me? And this is not as complex as one might think. So again, similar to the last video, I'm thinking now, is it truly an investment to put money in a high interest savings account at this point, because it's risk free and you're getting well over a 4% return? We also have the possibility of the Fed raising rates again in June or July, which will increase interest rates in your savings accounts again, where we might reach 4.5 or 5% without having to purchase a CD, certificate of deposit. Once you reach 5% interest rates in a savings account, is it still advantageous to invest in the stock market? Now, you all know my answer. The answer is yes, it's still advantageous to invest in the stock market, because when times are good, we will see 22, 30, 40% returns. And the issue with taking all of that out and putting it into a high interest savings account is that you would then essentially be timing the market. And the time where you would put your money back into the stock market, it will be too late. You're going to miss the boat and stocks will be rising like fire, okay? So you're going to be feeling good, smiling, getting that 5% return. But then when stocks shoot up overnight 10%, 20%, 30%, you've missed the boat. And then you put all your money back in, hoping to get in while it's still hot. And then you only get a 5% return. So don't try to time the market. Definitely keep your money in your stocks. And whatever you have left, emergency fund, a little bit of extra savings, whatever that may be, you can add that to your high interest account. Get that 4, 5, 6% returns that is out there. Those nice returns that are out there. Continue to do what got you there, right? And so in 2023, I'm just investing as normal. I invest 14% into my Roth IRA. I invest a little bit more than that into my individual stock market accounts. And then as I gain more momentum, especially in real estate, getting a new tenant and everything else, I put more of my cash flow into savings, high interest savings. I have a Series I bond that I'm now monitoring to ensure if I'm going to keep that going into next year, or if the interest rates are too low to where I just take that out and put that into a higher interest rated savings account in order to reap those benefits and returns. On top of that, I am on a budget. Just created it last weekend. And the reason I'm on a budget, and that was before getting a tenant, is so that I can manage how much fun I'm having every week and every month. And I realized that I am investing and saving damn near everything that I have, to the point where the fund that I have is literally about 14% of my income every single month. It's less than that, actually. It's probably about 12, 13, 12, 11, maybe even 10% of my total income. And so every month, to have fun on 10% of your income and then be investing or saving 90% is a recipe for greatness, in my opinion. And without thinking about it, it was amazing to see that was the outcome, that was the benefit that I was getting. And I wouldn't want it any other way. I get to enjoy life with my friends, family, and others. I didn't put that 10% into a vehicle that I had to finance for years. So I get to spend that time going out to eat. I get to spend that time eating ice cream, spending it with another person, or even not going out for a month or two so that I can go on a little trip. And then when others are going on trips, like my little brother is going to Miami with my cousin and a couple of other friends, I just came back from Dubai and other events like that, Switzerland, France, Netherlands. So I am not feeling the vacation fever, whereas I can just sit back and say, oh, wow, enjoy yourself, have fun. Literally all of my friends have just went and came back from Miami last week. I don't know what it was about last week, but everybody went last week. And I'm sure they had an amazing time. There was an African concert and many things going on. But you understand that you don't have to partake in everything. And everything is not for you. Enjoy life, but also be conservative and understand that there are certain things that you need to accomplish and get done prior to you going out splurging and having fun. Because I can assure you that all the people I know that's doing that are not saving 90% of their income. Right? I can assure you of that. It doesn't mean that they're doing bad in terms of investing or saving, but it just means that I am putting myself in a position to where I'm so far ahead of the curveball. And my thoughts and my worries are completely different than the thoughts and worries of another person, right? What my concerns are is how do I constantly put a little bit here and there, just chipping away at the mortgages? Not that I need to, but there's a part of me that says, you know what? Having the ability to just snap my fingers and pay this thing off would be much more exhilarating, much more exciting than knowing that I'm going to have to continuously work at it. And I'm already continuously working at it, but it's going to be much more exciting later down the road when I can just sit back, smile, and say, you know what? It's going to be a different feeling. I already know it will be. And so as I invest that 90%, as I save that, I also understand that there's going to be a blessing that comes with it later down the line, where when I'm older, when I'm not as fresh, when I'm unable to do as much as I do in the gym today, when I'm unable to be as productive and as effective as I am, I can be more relaxed and understand that what I've accomplished this year is only going to benefit me tremendously going into future years with dividends, with interest, with all the time, effort, and work that I put in, and all the times that I said no to short-term gratification is all going to pay off for my betterment and my greatness. And so in 2023, to sum it all up, I'm not buying any new vehicles, not buying any new toys. I may go on a vacation later in the year, right? But that is for my cousin's 30th birthday. So, you know, big events like that, you definitely want to be a part of. You want to share in the memory versus the experience as well. But it's really for the memory, for the family member and for me as well. So on top of that, I'm going to just constantly be consistent with the stock market. I'm not going to do any impulsive buying like I did in 2022, where I bought a whole bunch of Tesla in 2022. This year, I'm just going to sit back and invest in the companies as I normally do and do my little stock market recap and evaluation right around December to see what companies do I want to drop and what companies do I want to keep. Another thing that I'll do is I'll continue to keep my money in the Series I bond as long as it's continuing to generate 9 to 7% returns. But when it drops under 3% returns, I'm going to be looking to take that money out and put it in a high interest savings account. Another thing that I'm going to look to do is continue to monitor the real estate market. Right now, it's still a seller's market. It is not a buyer's market. And even though I understand that, I'm still looking for deals, assumable loans type deals, different deals that will make it advantageous for me to go out into the market and seize an opportunity. But if that opportunity does not present itself, I am now trying to calm my mind and sit back and understand that this is really not an investor's market. And so I don't really need to push for a deal at this point, understanding that it's still a seller's market and that I'm not going to get the best offers. What I'm finally starting to see is prices come down a little bit, but these prices are astronomically high to the point that it still doesn't make sense. And when I'm crunching the numbers, I'm crunching numbers expecting the housing to go down another $30,000 or $40,000, which I just know is very, very unrealistic. And so with that being said, there is zero reason for me to continuously check up on these properties as I've been doing, but it's a force of habit that I know I just won't be able to break. And so I am trying to mentally coach myself in order to stop heavily focusing on that and just contributing more time to learning as much as I can about more real estate, more stocks, more credit, so that when the time does come, I'm able to pounce on the opportunities that present itself. And knowledge is power. Knowing as much as I do, I'm able to access different type of loan opportunities and different type of housing opportunities than I once would. And that would make any market advantageous when you know exactly what to do. And so I still keep my eyes on the prize. I'm still looking at real estate as a good option, but then I weigh all the pros and cons. We have a stock market that is very, very advantageous and discounted right now. We have a high interest savings account that is very, very advantageous with a 4% plus rate of return right now. And then we have a real estate market that has not cooled off yet and is not as advantageous. So we have two things working against that. And so I believe that it's time to shift my focus more on that, which is hard to do when we just came out of such an amazing time in real estate. And so that's where I'm at with 2023. I do expect real estate to start to cool off for the better in 2024, especially in the Q1. But for now, I'm literally forcing myself to shift focus while studying and learning as much as I can. If you like this video and you want to know more about what I plan to do for the rest of 2023, make sure you subscribe. And I will definitely see you in the next one. You know I post every single day at 8 a.m. daily on YouTube and Rumble. Peace.